Good morning, good morning, good morning. Welcome to the July 16th, 2024 live stream. I want to start off the stream with looking at the Forex Factory, the economic calendar. So today we had news release at 8:30 a.m. EST, core retail sales and retail sales, both red folder news. So we did have, some sort of volatility injection. Why does it keep bringing me back to NQ? So we did have some sort of volatility injection here. So at 8:30, this is what we had dropped down and instantly came back up. Coming into today, I am like on the sidelines probably for today, because we closed back above a daily fair value gap here on the daily time frame. So notice how we closed back above that daily fair value gap. So it should be we should treat it as a support level now. So yeah, coming into the lower time frames here, we traded inside the consequent encroachment near the end of the day here yesterday, and we had a reaction off to it. And now I'd like to trade lower time frame models just because of it's pretty like the prices are pretty consolidation. We're in consolidation here, so I'd like to sit at the sidelines here and just watch prices and trade lower time frame models, like I said before. If we do get like an displacement towards one side of the market here, then I'll consider taking a trade. But as of right now, on the higher time frames right now, I wouldn't take any trades, or I don't really have much of a narrative here. So today could be like a London low of the day template here. We do have Asia's highs that we haven't taken out yet, so I am anticipating a run up to at least Asia's highs, and possibly equilibrium of this range here, which it appears we already did trade back inside it. So we rebalanced equilibrium already. So as of right now, like I said, I would wait and just trade lower time frame models. Yeah, that's all I have for right now. We have opened up in about like 5 minutes, so we still have some time left to the open. What else do I have to say for the morning? I'll go over the risk management again, and what I do want to improve on this week, because like I said, I want to instill it into my brain. I want to keep repeating it until I don't have to repeat it. But yeah, I'll go over that near the open and during the first 30 minutes, because I'm not really going to be watching anything. I'm not going to be watching prices. Looks like we will have a gap up day here, an RTH gap up. Here's the trade that I did have in mind, just coming like before the stream started. This is something that I was just looking at. There's this order block here that prices respects, and I'm basing this trade off of the 15-minute power of 3 here. So what can we anticipate just looking at based on this 15-minute power of 3? I can anticipate this high to be taken. And the reason why this trade is a little bit, why I didn't take this trade, is because I'm not basing my trade off of a fair value gap. My entry has to always be a fair value gap, and I'm not entering on a fair value gap, so I'm not taking this trade. It's just hypothetical. But this trade isn't a bad trade. It's in context with the higher time frame, because look at what happened on this hourly candle here. At the 8 a.m. hourly candle, we had a pretty pretty bullish closure. So I am anticipating this hourly high to be taken, and it's a matter of when. And we're disrespecting, you know, bearish PD arrays, and we still have Asia's highs as our objective coming into the morning. So today could be a classic London low of the day. But if we were to look at the weekly template, right? The weekly template right now is, so this is yesterday's trading, previous day low, previous day high. So what can I anticipate coming into this week? This week we could actually have a inside trading week here. It is the third week, so like I said, it could go either way. It could be an expansion week, because if we're looking at on the monthly candles time frame, we can anticipate, you know, some sort of expansion up higher. So like I said, it could be either an expansion week or just an inside trading week this week. We just have, we'll know when that happens whenever we get displacement on the lower time frames, and it's in confluence with the higher time frames as well. So there's my trade idea that I just had. So we just took out that 15-minute high. So now on that trade, I would have moved my stop loss to break even now. And like I said, I will be targeting that hourly high and Asia's highs. So if I were to take, like, you know, if I were to take the standard deviations here, so I would project standard deviations like this here. This could be a standard deviations. This could be one as well. So I want a standard deviation that aligns with existing buy side already. So this -1 here aligns with this hourly high. So I'll take off like another half of my position size at that -1 standard deviation, and full targets could be Asia's highs. But the reason why I didn't enter this one is because, like I said before, it's didn't retrace back inside an FEG, and it just came into an order block. So there's open. So open, we took out Asia's highs, and let's see what we do from there. But there's Asia's highs now taken. So the only liquidity left that's session based is London lows. So for me to target London lows, I would have to see a closure below this hourly FEG and this 30-minute FEG, so I can see, you know, disrespect of bullish PD arrays. But like I said, it's today's going to be an interesting day today, rather a little bit more interesting. Here's the 4-hour time frame. Let's see if the daily time frame look like. So there's the daily candle here. So not much to base my trade off of, to be honest, because like you can anticipate previous day low to be taken, but there's no supporting PD arrays that are respected to be able to go continue lower. So it's just interesting. Here's the SMT chart. And I do have Dixie pulled up to my left here, and it looks like Dixie had a pretty big expansion at 8. So it expanded higher. Here's the dollar. So on the dollar, I am anticipating for us to retrace back inside this daily FEG here. So this is why I noted out as this July 12th buy side with the plus sign next to it, which means it's just basically a draw of liquidity. So if you see dollar higher, we should be seeing lower prices in the indices. However, that is not the case, and we are trading higher as well in the indices. So you know, we're not in alignment with each other, which is a little bit less probability. So we should be seeing lower prices on the dollar, or I'm sorry, lower prices on the indices if we see higher dollar. But we'll see here. We still have like 27 minutes left to the open, or to the time frame that I usually take my trades on, or the time when I can actually start taking trades. Let me turn on the YouTube chat, so just in case anybody hops on, I'll be able to reply to them. Oh. Jeez, it looks really like just a higher time frame consolidation. Yeah, this is very, this is consolidation, to be honest. Why does it say 2 views? Is someone watching? I can't tell. But yeah, it's nice that to know someone's watching. So there's H's highest got taken. So that trade actually would have played out pretty well. Like I said, full TPs here would have been taken off, or like full target. Full terminus or target TP take profit would have been taken off at H's highs. So why am I on NQ? What the hell? But yeah, TPs would have got hit and stop loss would have been moved to break even by now. So okay, it's actually, brother. Where is my dang trade at? What the hell? So this is the trade that I had in mind this morning, but like I said, I didn't take it because it doesn't suit my my trade criteria. It doesn't fit my entry pattern. And notice how I am buying below the 9 o'clock open too. That's something that I do want to note out. So I'll probably just wait for the 10 o'clock open. Maybe something I probably will do. and just watch prices. So I do want to hop into a chess game just so I can get my mind thinking and stuff. So let's hop into a 10-minute blitz game. What just happened? It's a rather fast blitz game. Oh, wow. He's gonna get me here. I really don't like so if he takes, I take here. Alright, I guess this is fine. Because if he takes, then take it out, and then I scooch up this pawn. Develop this bishop, move up this pawn here. Huh. Did I really just... Did I fumble a piece there? I knew it. Now I have to. My pawn structure is kind of screwed. If I'm being honest here, it's kind of effed up. What? Okay, I just gotta actually helps me out here. Fix up my pawn structure just a little bit here. So he has 3 pawns. I have 3 pawns. Mine are kind of badly placed though, however. I'm kind of laser shotting his queen here. Okay. I can take his. This is a quick free pawn. That's a free pawn. He takes here, I take, so he doesn't want to take that. But if I go here, if I go here, he takes, and then I just take here. Anything can happen right now. We still rather wait to see what could actually occur here. What did he decide? Okay. So now I take this. Yeah, like that. His pawn is hanging out. Yeah. Tag that rook. He takes, I take. He takes here. Wait. He takes, I take. He takes, and I have to go back here. That's fine, actually. I can just go here. laser shot there. Brother. See what the indices. So YM's going higher. ES is, you can say he's going higher, and NQ is going lower. To be honest, that probably was the best move here, because if I had moved my bishop, he takes, and I'm just screwed. So NQ is now displacing lower on the 15-minute time frame here, and so on this 4-hour objective, if we were to close right now, I would anticipate this low to be taken. So yeah, bye ma. Vì ngày hôm nay má có về sớm không vậy? Má cắt tóc cho con ngày hôm nay không? Yeah. So he's attacking that pawn again. I am big chilling though, I think. Just get my pawns out. I'm gonna attack this pawn here. I actually go right here this time. Oh, he fumbled it. He fumbled. Now I'm in check. He go right there. I go I go here. He goes here, I go here. But still nine minutes left to the closure here, so I'm still waiting, still being patient. Like I said, if I'm going to be bearish, I want to see us close below this 30-minute FEG and this hourly FEG here. So this 30-minute FEG and this hourly FEG should be closed below. Oh, here, and then now I can just start taking on his pawns. He takes, and I'll go here now. That's cool. Which one is he gonna attack? My okay. Now he's lost. Here. Checkmate. Let's go. Let's go. Interesting, interesting. So I don't like how we had this on this 5 minute here. We closed this inefficiency that I thought was going to be created. So us pricing higher here it's not showing signs of weakness, like strength to the downside. It's just going kind of back and forth here now. So interesting. Let's look on the 8 hour time frame here, because the 8 hour is about to close soon. So look at that 8 hour candle. Interesting day. Interesting price action so far. I'm gonna go get something to eat. Actually, I'm gonna just say not F the charts. I mean, so I'm gonna go get something to eat, and I'll be right back. Alright, so we just got that huge displacement candle here on on NQ now. Okay, so that 4-hour candle, like I said before, if we close right now, I would suspect for us to take that 4-hour candle's low, right? And the only thing is, I am not seeing lower prices on YM or ES, so this is just a little bit interesting. But at least on NQ, I can anticipate for lower prices. So we just took out that about that data lows there. So what can we see this as? You know, liquidity sweep of Asia's highs to target London lows, or let's see if we can set up some standard deviations. That would be pretty nice. Okay, let's see. Oh, whoops, that's not standard deviation. So when did we, this is the swing low here. This is the swing low that creates the swing high. -1 about aligns with that. Let's look at what the 3-minute has created. I don't suspect us retracing back into that 3-minute FEG, because this looks like it's going to create a breakaway gap, if I'm being honest. So there's previous day low there. Let me mark out London lows just so I can have it. There's London lows. London lows there. Let's go 2-minute time frame. So there is that 15-minute candle close. So here you could have taken your entry at that 2-minute FEG by targeting this, but it's not even a 1-to-1, which is I don't like. That would have been a 1-to-1, but let's see what entry would have looked. Something like that. The entry would have looked something like that if you were to take the 15-minute power of 3 here. Let's look at the 8-hour candle. Look, what does the 8-hour candle look like? Looks like that. Okay, so we still have the 8-hour low to take, so that could be an objective for us later. So there, I would have probably taken this entry right here at that 2-minute FEG to target the 15-minute lows, but I don't think I would have been able to get into it because it was kind of fast actually. But so there is that 15-minute low get taken and that 4-hour low. There's London lows in target as well. 10 4-hour open. So yeah, that, like I said, that would have been the entry to tap inside that 2-minute FEG to target the 15-minute low, and now stops would have been moved to break even here. And standard deviations -1 would have been I would take a partial there and London lows as a target as well. But yeah, I actually don't know why I didn't take that. It just was kind of fast. I didn't have the trade set up to take it, so it's cool. It's cool. Look out for the food. Delete that. So I believe we are about to take that 8-hour low actually. That 8-hour low is actually London lows. So see what happens after we take out London lows here. So yeah, full terminus here would be London lows. If we can see even more displacement lower, then previous day low would be target. So yeah, -1 standard deviation, partial taken off there in London lows as well. Then London lows are the final objective for me. Sorry about that. I'm eating. I know I'm eating a little on stream, but I woke up a little bit early today, so I'm a little bit hungry. Hey, look, he got. I was. Let's see if previous day low gets taken here. Oh, hot. Yeah, this is actually a pretty good, like, solid one. And I would have moved. I wouldn't have taken it at the 2-minute FEG. I would have taken it at the new weak opening gap that resided inside the 2-minute FEG here, just so I can, you know, mitigate risk just a little bit and at least make it a 1-to-1. So previous day low looks like it will be taken here too on NQ. Look at the higher time frames here. If we take out previous day low, then I would like to see us fill in this gap, this 4-hour gap here. So there's previous day low just taken, just taken just now. So let's move that here. Now we're inside that daily FEG again. Let's just continue to watch here how prices, if prices just keeps dumping. But like I said, I want to see YM catch up, because I don't like how YM is like it's completely opposite of what NQ and ES is doing, which is, I don't know, it just seems a little bit skeptical. Hey, I love this community. We're gonna talking. Let's go interacting with each other. Let's move this, change that to a 5-minute. So now this upcoming 15-minute candle here, I am going to anticipate this 15-minute candles here to be this 15-minute fair value gap here to be a breakaway gap. Just like what can we anticipate? A refill of, like, a rebalance of this fair value gap first. I would rather see us take out 15-minute low and then some sort of like that, but I don't see us retracing all the way back into this fair value gap before taking out the 15-minute low, if that makes sense. So I don't see us taking, like, we close here and then we retrace all the way back to just to take that 15-minute low. That's not efficient. I would like to see us take out the low first, and then wherever we go from there, it's just up to prices. But so let's see what the next target could be. Oh, that's like I said, the rebalance of that 4-hour FEG. So higher time frame now. Higher time frame has been taken. The objective for higher time frame has been taken. For a previous low, I need to see more structure. That would, suggest the idea of us taking out previous week's low. And like I said before, on the dollar, I do want to see us take out July 12th's buy side liquidity here, just so I can see us rebalance this daily FEG, because us rebalancing a FEG is an objective of its own. So I do want to see us rebalance here and see if we respect it or not. So that's just what I have in mind for the dollar. But for the indices, like I said before, it's a little what's happening? There we go. There's NQ. What BPR is he talking about? Balanced price range? What the fuck? This one? Two minutes here till the 15-minute closure, 15-minute candles closure. So there's that 15-minute candles closure it's about to happen in about like 20 seconds left. So I can anticipate this 15-minute fair value gap here to be a breakaway gap as soon as we close. Look at that. If I were to do standard deviations and projections, we've already met majority of them here, so if I were to take this trade here, stops would have to be pretty wide actually, which I am not a fan of. 41 pip stop loss, but I'm trading micros. I would like to see it as continuation lower on ES2 or YM. I would have to see YM go lower here, but YM's not trading lower at all. Yeah, if we take out this 15-minute low, then I wouldn't consider taking anything here, because in this retracement here is a little bit deep too. It's a deeper retracement. If I were to take discount this range here, yeah, it aligns with the I would wait, actually. I would wait. I would like to see us retrace into like a fair value gap, like a 15-minute BISI, or not BISI, sorry, SIBI, and see us respect it, and then I'll take the a trade. But I think I'd rather just be patient here and just watch prices. Like calling out the Asia's highs get taken here was probably like pretty good. After taking out Asia's highs, that's when you just spectate. That's when you go on the sidelines and just watch what's gonna happen. like what's gonna occur. And after we take out Asia's highs, that's when you can anticipate, okay, like what's price is gonna do next. Notice this 15-minute candle here. Just based on this 15-minute candle's closure, it's like bearish, right? We can anticipate at least that 15-minute low to get taken, and then, but I'm not trading that because it's during, you know, we just opened, and I don't like trading the open. So 30 minutes, I let that go by, and then 10 o'clock open actually. And when 10 o'clock opens, we have, you know, a 4-hour closure, 8-hour closure. So 8-hour, the 8-hour, 4-hour, 1-hour, 30-minute, and 15-minute have the same objective, which is to take out that 15-minute low. And which is why I had this trade up. But the thing is, I wasn't on the M&Q chart, I wasn't on the micros chart yet to actually set up the trade, so which makes this a little bit tougher to enter. So, and we took out the objective in literally a minute or two. So this is a good trade though. This is a solid trade because we retraced into a 2-minute FEG. I might do a recap just over that trade actually, because it makes a lot of sense. There's that 2-minute FEG. That would be an A+ setup, just because we have the 8-hour. They have about like 5 time frames that had the same objective. Two M FEG here. Let me mark that out. 30. Whoa. Let's look at what's happening on the 30-minute time frame here. So like I said, I didn't want to take that just because it's a deeper retracement, and I want to see us respect fair value gaps first before I would take something like this, just for this one actually. This is similar to the CPI trade, but the thing is, on CPI, when I took the CPI trade, we still haven't taken out the higher time frame objective yet. The reason why I'm not taking this trade here is because even though I can anticipate this to be a breakaway gap, like I said, we already taken out higher time frame objective. So what's the point of us retracing inside that 5-minute FEG, right? We retrace into that 5-minute FEG to do what? To take out this low again? I mean, we can do that, but is that something I want to risk? That's probably not something I want to risk. It's just not up to my it's not something I want to risk. And as traders, it's our job to manage risk. We're literally professional risk managers, if that if that makes any sense. Boom, boom. Finish my food. So let's see if this 15-minute fair value gap actually doesn't get tapped into, and we respect the 5-minute FVG. I just want to see how we close here on this 15-minute. But like I said, higher time frame objective here. We already taken out previous day low. Not something I want to mess with anymore. But I do want to do a recap over that trade today. That was like really good, really good. Because even before coming into like let's say like just looking at here, we've taken out Asia's lows and highs, right? We've taken out London highs, but we've yet to take out London lows. So if today was gonna be a London low day, right, we wouldn't have made this really big move down. So when seeing this big move down, right, it's just, you can anticipate. You never know something that's gonna, like, if something's actually going to occur. But with this big move down, right, and this placement on the 5-minute time frame, we can anticipate for London lows to be taken. It doesn't mean that we know, we just can anticipate. And on the 15-minute time frame, you want to go on to like after this 15-minute candle's closure, just go into the lower time frames to see if there's if there's like a fair value gap that prices retraces into to take out 15-minute lows and to continue lower. So that 15-minute low is in confluence with the higher time, or with the idea of us taking out London lows. I didn't know we were going to take out previous day low, but like I said, look what happens. We take out previous day low, which is, you know, nice to see. So now this is where we are now. So like I said, we are still whatchamacallit, we are still continuing lower. It's just, how low can we go is my question right now, because previous week's low isn't, for me right now, I wouldn't say it's the objective at this very moment, because look how far we are. If we were something like near like here, then I would say previous week's low is the objective, and then I would take, you know, some sort of entry to target that previous week's low. But as of right now, I don't see it as an objective. What's the current objective right now if you were to look at it? I mean, our current objective is probably to continue to create these fair value gaps. With this 30-minute fair value gap that's about to be created here, I can anticipate this fair value gap to be a breakaway gap, right? Just based on the fair value gap theory that I have up on my YouTube channel. Quick, easy plug there. What can I anticipate for this 30-minute fair value gap to be a breakaway gap? So with that in mind, it's a breakaway gap, right? So I'm anticipating for prices to take this low first. So if I have that in mind, I can structure a trade just based off of that. And like I said, you want to go into the lower time frames to see if there's anything that can support the idea of us going lower. If there's not, then you don't take the trade and you just tape read. And that's basically what I'm doing. It's kind of upsetting that I literally didn't. Oh my, I don't know why I just did not take that. I don't know why I didn't have it. I should have just had. I need to switch my my charting from the actual NQ chart to the MNQ chart, so I could have like faster executions, because I don't want to go all the way switch back and forth between MNQ and NQ. It just takes a little bit longer than it's supposed to. From, you know, like I said, switching between two different charts. Same charts, but like different in a way. Because one's like actually like 10 times the other. So dollar here. Dollar is trading higher. We tapped into this hourly FVG here and we're continuing higher. because I'm seeing higher prices on the dollar, I can anticipate lower prices on the indices. But like, if you look at what YM is doing right now, it is not going lower compared to NQ and ES. And ES hasn't even taken out 830's lows yet, and look at where NQ is at. There's that massive SMT, and I don't like that SMT at all. Because I want to see, you know, ES and YM follow suit, but because we're not following suit, I don't like that idea of us taking out previous day low on NQ and not even taking out 830's low on ES. So professional risk managers. What do you do for a living? I manage risk. Sounds cool as fuck though, I'm not gonna lie. So we have about like a minute left for the 15-minute closure and 30-minute closure. We'll see what happens. What? Oh yeah, I forgot. Let's go over my risk management. I completely forgot. That's what I have to do here for my objectives for the stream today. I'll do this every single day this week just because I just told myself I'd do it. So things I can improve on this week. So I want to follow my risk management plan, and I'll go over that right after I go over this. So I want to follow my risk management plan, and I want to go over them at the beginning of each live stream this week. So I'll be doing that right after. Follow trade plan thoroughly. So which means I literally have my trading strategy on YouTube if you guys want to check that out, and I'm going to be following that to the T this week. No exceptions. And I just want to stay more composed during stay more composed and like stress-free. Not stress-free, I mean every trade's stressful, but you know, control my emotions a little bit easier. Because I mean, if you were watching yesterday's live stream, I was in a trade yesterday, and I don't know how I did. I should probably watch how I, like, you know, carried myself during the trade. But I just want to practice, like I said, practice breathing exercises during the actual trade itself, during the trade, and just be content. So let's put that out. Be content with the outcome. And so practice breathing exercises, clear thought process. And clear thought process, I think I did this pretty well yesterday, because what I was doing yesterday was I was able to hold the trade here longer, because like I said, I'm considering every single candle's power of 3, right? So my objective here was, I believe it was previous day high. So after we take out previous day high, right, I'm thinking, oh, should I close this trade? Should I DR? But I'm, clear thought process. I'm like really thinking about what I can do here. So I set up my standard deviations from this low to this high. I'm setting up standard deviations, right? And I'm just slowly taking off partials every time we hit a standard deviation line. And like I said, based on this 5-minute closure here, what can I anticipate this 5-minute high to be taken, right? So with that in mind, it gives me more conviction and confidence to hold my trade. And I wouldn't have thought of that when I was just beginning to trade. But like I said, the more time I do this, like the more experience I get, the more clearer my mindset or my thought process is whenever I'm actually in a trade. So yeah, I would say I did pretty well there. Clear thought process, and I was pretty content with the outcome. I mean, yesterday it was like, actually I got in and I instantly I instantly got filled for my partials, and it was actually a zero drawdown trade, which was, you know, one of those like trades that like you love, but not every single trade is going to be like that. So I have to just fortify my mind and just be stronger in general. Today I don't know why. Oh, I do know why, but like I said, that's a mistake on my part. I should have already had the trade actually set up and everything, because like I said, if it's my trade model, that's literally quite literally my model. I should have taken it. It's completely my fault that I wasn't prepared for it, and next time, like I said, I'll be prepared for it. And I'll go over a recap on this trade, but for right now, I'm gonna go over my risk management, just so I can get my objectives, completing what I have on my journal here. So I have to complete every single of these micro objectives daily, so I can just keep my habits, on tag. I don't know how to phrase it well. So today I would be considering to trade more aggressively here. Today isn't like a day where it's like NFP week or like CPI week, or like not CPI week, I'm sorry. This week isn't NFP week or like FOMC week, so I'll consider trading more aggressively here. And aggressively, I just mean like trading normally. I'm not gonna de-risk myself, so there's no point in de-risking. So my very first trade coming into every single day will be a $480 maximum stop loss if it's a 1-to-1 RR bare minimum, and my maximum stop loss would get increased if my risk to reward is a 1 to 1.5 or higher. So if it's a 2R, then I'll take 720 maximum stop loss. If it's a 3R, then I'll take a $720 maximum stop loss. So, for example, this trade this morning, I would have taken on M&Q. See, this is what I mean. Like, it takes too long. That's about like 10 seconds already, and 10 seconds is like, in trading terms, it's fucking fast. I'm sorry, excuse my language, but it's fast. So here's the trade. Oh wait, this is not the trade setup. This is the trade setup here. Sorry. Here, I want to make it at least a 1-to-1, because like I said, I don't want, if it's not a 1-to-1, then I'm not taking that. So I have to be content with what my risk is. I'm gonna close that because I'm not taking that. I would have taken. So here, okay, so this is basically 1-to-1, and it's like I said, it's trading into that 2-minute FEG that I had in mind. So 1-to-1, right? And it's the first trade of the day. I'm risking 480. So how many lots or how many contracts would I have taken here? I would have taken, let's see, 17, not 17, 15. Okay, let's try like 12, not 12, 10. So I would have taken 10 contracts here. 10 contracts for this trade, right? And my first partial, and like I said, I'll go back to that. So I take my partial at that 15-minute low, and then I let my runners run to standard deviations that I had set up here, or I would have had set up. So -1, and London lows would have been TP, like full terminus. That's it. So I'm, risking 475 to make 480. I know that sounds a little bit bad, but it's just the way I'm doing it, the way I trade. It's I don't want to say high probability, but there's a lot of rule sets, so it kind of increases it. But yeah, there's that. That's just an example of how many contracts. So I'm taking half my position off at the partial, and then I let my runners run So my next partial would have been like 3 contracts at that -1 standard deviation. So at -1, I would have taken off 3 contracts again, so I would have only 2 contracts running. And at London lows, I would have taken off the remaining, which would have been 2. But there's that. So that's how my sizing would have been. And let's just say I won that trade, right? So my very next trade, and let's say I made like 800 with considering all the partials and everything I took from this trade today. And let's say I made 800, right? The next trade that I would take, I will only be risking about half of the profit I made from that very first trade. So if I made $800 on my very first trade, my second trade of the day would be, I would only be risking $400. This is only if I win my first trade. But let's just say I lost this trade, right? Because anything can happen, which is why we have stop loss. But let's just say that we retraced and we took out, my stop loss got taken out, right? If I got taken out here, then the second trade that I would have taken today, I would only be risking $240 maximum stop loss if it's a 1-to-1 risk to reward ratio, and if it's 1.5 or higher risk to reward, then I'll be risking 320 maximum stop loss. This way here, me doing it like this allows me to take it just, you know, lengthens the time frame, or like the amount of time that I can actually trade, because capital preservation is the #1 goal in trading. So that's why I reduced my trade size like that. Third trade, same concept. If I win my second trade, so let's just say I go for 2 for 2, I would only be risking a half of the profit gain for my second trade. So let's say, so my first trade, right, I make 800, and then I win again on my second trade, and I was only risking 400 there. And let's say I make about like 600 my second trade. My third trade, I'm risking only 300. And like I said, this helps me preserve the profit that I do have. And if I do end up losing the second trade, right, so if I do end up losing the second trade, my stop loss is 120 if it's a 1-to-1, and my stop loss would be 160 if it's a 1-to-1.5 or higher. So if it's a 3 RR trade, I would have it at 160 still. Nothing would have changed. So I'm not taking any models that is below a 1-on-1 risk to reward. That just does not make any sense to me. I'd rather take a coin flip than have like, let's say you have a bag of Skittles, 4 Skittles, right? You have 4 Skittles in the bag, and there's 3 Skittles in that bag that can kill you. Would you take it? No, I wouldn't take it either. So maximum is a 1-to-1. My risk to rewards, like the way I set up my trades, I'm setting it at the first partial. So I'm not setting I know that London lows is my full terminus, right? I'm not gonna set my target, my TP here at London lows, because that's not my risk to reward. I'm risking my target, my first partial is where that 15-minute low is, so that's where I'm gonna have my TP set at. Like if I had set it right here, this would have been a 2R trade, but am I holding my entire trade till 2R? No, I'm gonna take partials, so I'm gonna have my trade set up at my very first partial. And whenever I take my partials, I take my first break even. This is what BE stands for, break even. Not set where terminus is. So like I said, my terminus, if I had taken this trade today, it would have been at London lows. And when taking a partial for the more aggressive trading, it's half of position off, and I move stops to break even. So I have this example here. You can take a look at for yourself. And when so I have two different, not trade styles, but ways of risk management. And if it's, so my second one is, if it's poor market conditions, I'm going to de-risk myself. I have the video basically like done. I just have to record myself talking about when markets will be in poor market conditions. But so whenever we are in poor market conditions, I would de-risk myself. So I'm trading about like half of what I usually would be trading. So here you can look at all the numbers yourself. I'm probably not going to go over it all over it again. Just take a look at the numbers itself. And one thing that is a little bit different here is when I'm taking a partial, I'm taking 2/3 of the position off because it's lower conditions. So like I said, not every single of my TPs might be hit because it's just lower conditions, right? And I'm already trading in lower probability conditions, so there's no point of risking my position sizing. So I'm taking off 2/3 of my position size to guarantee my what I have in my in my unrealized profits. So I'm taking 2/3 of it, my position off at my first partial, and I move stops to break even. And you can see here the original position size. Let's say if I were to take 20 trades, or let's say my first trade, right? I'm taking 20 contracts. Once my partial gets taken, I'm taking 13 off at the first partial, and I move stops to break even. And my next TP, I take off 5. And yeah, that's about it for my risk management. So that's completed for the live stream for today. That's all I have for the my objectives for this live stream. So let's go back to the actual chart itself. Ooh. So this here, I would actually take. So notice how we, on the left side of this left chart here, this 3-minute FEG, I would consider taking that. Because based on the 15-minute power of 3 here, what can we anticipate this 15-minute high to take in, correct? So just based on that, I would take a trade there. And it's a 1-to-1. So it's a 1-to-1. 480, right? So 15, 16. And I'm just basing this off of taking that 15-minute high. And I want to see us rebalance this 30-minute FEG here. So we are coming back into a 3-minute FEG here to target that 15-minute high. So I'm taking half of my position off, so I have 17 here. So I'm going to round up to take off 9. So I would sell 9 here if my partial gets taken. So there's my partial here. It's actually 1.5 or higher, so I should have risked a little bit more, 720. But that's fine. So practice, that breathing and stuff such as so. Stop. Oh, why is my stop loss? There it is. Okay, so that would have made it. Yeah, I was like, why is my stop loss at the 3? No, that makes sense. Okay, that's why I took an only. There we go. I'm buying below the 10 o'clock open, which is not bad. That's a confluence there, the 10 o'clock open. Just targeting that 15-minute high. And on the 30-minute time frame, I do want to see us rebalance this FEG. So the story itself, not well, why is it red? There we go. I don't know why it was red there. So like I said, I'm targeting that 15-minute high here, and on the 15-minute time frame, I do want to see us take out that 15-minute high, and the 30-minute time frame, I want to see us rebalance this just based on how we're closing here. Something I don't like is how we respected the consequent encroachment, which is not what I want to see. Is a respected consequent encroachment. Of that 15-minute fair value gap. Said build conviction here, taps into a 3-minute FEG. I would have liked to see us close above this 15-minute fair value gap for more confluence, however. The only reason why I'm actually liking this trade is because of the ES and how strong we are on YM ES. So, you know, NQ could play catch up here, and yeah. So if we take out this 5-minute high, I'm gonna move my stops to break even just cause. And like I said, if I get stopped out, I get stopped out, but I'll be stopped out at break even at least. But if we don't, then I won't take anything here. Like I said, that's the only thing I didn't like. Don't like here is we didn't close above that 15-minute fair value gap. I should have looked more into it and not rushed the trade. So ES just took out the high. So let's move stops to break even here. So ES just took out, it's like this high here, and I don't like where NQ is. NQ hasn't even got anywhere close to its high, so that's kind of worrisome. So here it's just now, it's like a de-risk. I didn't take anything off, but I just don't like how we didn't close above that 15-minute fair value gap. So yeah. So if we can retrace inside this 30-minute FEG, that would be my full terminus, is that 15-minute, a rebalance of this 30-minute FEG. As of right now, I am just targeting that 15-minute high. So, and I feel like I forgot how there's unrealized profits too. So. I don't want to just take off contracts here because that That's not me following my trade plan. But like I said, the reason why I'm moving my stop loss here up is because ES had already taken out its high there. So I basically just got stopped out at break even. Yeah, -7, that's fine. I really like how I was able to manage that, actually. NQ should have taken out that high and rebalanced the 30-minute FEG with ES taking out like daily highs again, but we didn't, so. So SMT was able to help me manage my trade there a little bit better. Seeing signatures and prices here also helped me manage trades a little bit better, because like I said, we should have closed above this 15-minute fair value gap, but we didn't. So, and we didn't even close above the consequent encroachment. Bow, bow. Really is like a video game here. I don't like taking trades that aren't sure, but dude, this is I should make that one of my another rule is that I should have at least two time frames that align, that have the same objective before I can take a trade. But I should just type that down actually, just so I can have, like, if someone wants to copy the same way I trade, they should also consider that. Okay, so okay, yeah, if you are trading a lower time frame model that aligns with, consider leaving some contracts. Yeah. This is very important. Oh, I think this is probably one of the most important aspects of this, the way you trade this is because whenever you have multiple time frames that align with the same time frame here, it just aligns I don't know how to, fuck, I'm lagging. If there's multiple time frames that have the same objective, that gives you more of confluence. It just gives it more probability, if that makes sense, because there's no time frames competing against each other. So like here we might be going higher on the lower time frames, but overall narrative on the lower time frames we are going lower. So going higher is a little bit harder than trading lower. I'm confusing myself. Neil, if you're watching this live stream, man, hey, type in the chat, man. I see you guys. You're always texting me solo, but you gotta text in the group chat so we can see more interaction, my friend. Let me recap. Let me look at what he entered off of. I think he just entered right off of This is the 1 minute time frame here. Did he just enter right off at 10? He probably did. Did he wait for retrace? I have no idea. Okay, so it is now 10. What do I want to do? Okay. Let's see, actually. Should I do a trading should I do my trading psychology snippet on stream? I guess I can do that. Okay, let's do that. Trade concepts. So this is where you guys get to see the master at work here. So this is gonna be one of the videos I will put out, is trading psychology. I think this is probably gonna be, I really want to spend more time on this video because trading psychology is almost, it's like the yin and yang of trading. You want the technical and you want the mental, the mindset to be able to actually prepare yourself to actually enter and exit trades. So the notes that I will be writing on here is based off of trading in the zone, but almost every single like you can apply every single concept of philosophy to trading if you think about it. There's so much. Like I read Vagabond. There's concepts of Vagabond that you can apply to trading. Like there's this quote that he says, if you pay attention too much to the leaf, you are going to miss the entire plant. But if you focus too much on the plant, you're going to miss the tree. And if you focus too much on the tree, you're going to miss the forest. So this is basically saying that you should broaden your perspective and viewpoint. Don't be too narrow-minded, because life is huge and you don't want to be so, zoned in on one thing. Broaden your view. And that, like I said, you can apply that to you can apply that thinking to trading. Like, what are we doing when we're trading on lower time frame and high time frame, this is the 15-minute time frame. But if you want to look at the hourly time frame, right, this allows even more context. So you don't want to be focused too much on the 1 minute. Even though the 1 minute has, it's all one force, right? But you know, each plant, each leaf, each tree has a part to, like, plays a part in the forest, in how it's created. Yeah, I don't know, but that is like, that's just one aspect. Trading in the zone isn't like, I mean, I would say it's more tailored towards trading, but you can use any concept, to be honest. And you can do base a lot of your psychology based on like any type of books, to be honest. There's this guy that I follow on YouTube. His name is Justin Ireland. He read this book about Taoism, and he created this entire video about how Taoism is, you know, just that state of enlightenment, that state of content. And he talks about how, you know, whenever you're trading, you should be content with what your trade outcome is going to be like, and like anything is gonna occur. Like if you, let's say you get a paper cut, it's up to you to decide if that paper cut's gonna hurt you or not, or if it's gonna, you know, hinder you. It's not like, is that paper gonna slow you down? There's so many concepts, meditations. You can apply meditations to trading. It's just not one book, is what I'm trying to get at. I intend to be the best version of me and to carry myself as a stoic. I do want to point, okay, so, damn, I'm going all over the place, but I do want to point out this 3-minute FEG that we have here. If prices can retrace back inside this 3-minute FEG, and this 15-minute closes like this, I would consider taking an entry at that 3-minute FEG and targeting that 15-minute high. But I'm not too sure what will happen at 10:15. So it hasn't even closed yet. So it's just something to look into as of right now. We are still trading below the 4-hour open, and this is also 8-hour open as well, actually. So this is actually a important time frame, very important. And if we retrace back inside this 30-minute FEG here, then I wouldn't take anything. I would not take any trades at all. And it looks like we are going to do that. If we do, then I'm not taking anything. And we just did, so I'm not taking anything. I don't want to stay on stream, but I just said that I'll create the thing with you guys, so let's do that. Let's do that. Let's do that. Let's do that, actually. So, I need to get out my trading in the zone. If we disrespect this 30-minute FEG here, you can consider higher prices. This is basically like the last line of defense for lower prices. If we don't respect it, we're going to go higher and attacking New York AM session highs. So, geez, my notebook has gone through all trading psychology. There it is. So let's note down some of the important trading psychologies. Trading in the Zone by Mark Douglas. It's a great book. Great book. You guys should probably consider reading it because it's a good trading book. Oh wait, whoops. So, first thing in the first chapter is all trades are risky. As traders, you must accept the risk. You must you must accept that. You must accept that. And be willing to risk. However, you must accept that, and yeah, you must accept that. Just leave it as that. Not all trades are good. And cannot spell. What's next here? Market. Learn to accept the market is neutral, but it's up to the trader to interpret what the market is going. is giving out via information. Fearful trading. When we trade fearfully, we will only receive negative results. Our brain narrows our focus, so never trade in fear. Never trade with fear. Fearful trading will only do us wrong. Will only to negative results. It leads to it causes, let's just say it causes our brains to be narrow and we will not have a broad we will not be able to we will not be able to receive the information market giving us. So just think about whenever you are just in fear, right? It's your mind is basically all your mind is focused on is surviving. You're not thinking to thrive, you're thinking to survive. And you need to think to thrive whenever you are trading, because like I said, you as traders you need to be able to take in all of the information that prices is giving you, correct? And the only way you would do that is if you trade with nothing, not nothing in mind, but you have to be trading with contentness. You know, if this happens, I'm okay with that, and if the other thing happens, I'm okay with that. You shouldn't feel, you shouldn't feel extreme pleasure. You shouldn't be in like a state of pleasure whenever you take a winning trade, but you shouldn't be in a state of like just complete disappointment. If you feel like shit, whenever you take a loss, you should just be in that constant state of just zen. What else do I want to talk? Oh, this is very important. Don't trade. Don't go into trading with trying to prove to other people. Trade for yourself. So you never want to trade to prove to in general. You don't want to do things just to prove to other people that you can. You should be doing that whatever you're doing to prove to yourself that you can do it. Like, I started this because I've always been a person that likes thinking a lot. It just makes me sound like a nerd, but I like thinking. And I mean, like I said, trading isn't who I am. Thinking is who I am, if that makes sense. I like thinking, and trading is just like an outlet for me to actually be able to think and to do what I love, which is think. So I'm proving it to myself that I can actually, beat this game essentially. And that's something that I've just come to realization of, because I mean, back then I would tell myself that I'm a trader, but now that, you know, I'm more open-minded, I wouldn't say I'm a trader. I'm more of an analytical person. I'm a person that practices patience, that, or at least tries to. I try to practice confidence. I try to practice conviction, and I try to be content. And like I said, trading is an outlet for me to practice all of those virtues. So don't go into trading trying to prove yourself anything, and don't go into trading because, you know, you don't want to chase whatever you're chasing. If that's, you know, the money, the freedom, it will come to you whenever it should come to you. And yeah, you should just be content. So that's pretty good, right? Don't go into trading trying to prove don't go into trading trying to prove to other people. Trade for yourself. I do want to point is, you are not a trader first. You are a person with confidence. You are a person that likes to analyze things. You are a content person. You are a patient person. All right. We must learn to control ourselves. That's pretty good. Controlling ourselves. What does it mean to control ourselves? We must learn to control ourselves, not our surroundings. So our surroundings, we can't do anything about that. It's just like how Marcus Aurelius, you just have to learn to accept. Once you really learn how to accept, that's when you can really prosper and grow as a trader. Let's go on to the third one. This is important. So the consistency a profitable trader seeks is in their mindset. I like that. You must seek consistency in your mindset. Keeping your emotions control at all times. Keeping your emotions control at all times will help with your mindset. Don't project anything. I think this will be a longer video. Don't project anything towards towards the market. Don't project anything towards the market. This will lead you to disappointment and sadness, if that is even a word, sadness. So don't project anything towards the market. This will lead you to disappointment and be content. Be content with what is. Okay, so I'm probably gonna leave it at that just for today. I'll finish it later on my own time. I want to get back to the charts because I am seeing something here. Something I do want to point out is look at how we respected the consequent encroachment of this 30-minute fair value gap here. So, based on the respect of this fair value gap, the consequent encroachment, this is like almost like a telltale sign that we are bearish, but we must see displacement away from this fair value gap on the lower time frames if I'm gonna take an entry. So by 10:30, if we don't see any displacement on the 5-minute or 3-minute or just any time frame sub 5, if I don't see displacement, if I don't see a trade model, I'm probably gonna call it for today and end the stream early. Oh, not early, but to end the stream. I think this was a pretty solid one, to be honest. A solid stream. Not bad. Let's practice. Like I said, let's just wait and see. Yep, I have to be content with what prices are giving me. I don't want, like I just went over, I don't want to be projecting I don't want to project anything towards the market, right? So I'm not going to. I should make this like double space just so I can see a little bit better. So like I said, don't project anything towards the market. That's just wishful thinking, and it helps with being just flowy. You want to be in the flow of constantly. But yeah, if I don't see anything in the next like 5 minutes, I'm gonna end the stream. Just practice what I have already here, so practice in your daily life too. So as all trades are risky, that's, like I said, nothing is ever guaranteed. Nothing is. Never trade with fear. So fearful trading will only lead to negative results. It causes our brains to be narrow, and we will not be able to receive the information the market is giving us. Don't go into trading trying to prove to other people. Trade for yourself is basically the highlight for that quote. You are not a trader first. You are a person with confidence. So let me underline that. I am statements. You should practice I am statements. Those statements really can help you with just yourself. Seek consistency in your mindset is the overall message for that one. Oh my goodness, brother came inside. Yeah, like I said, I'll give it more, like 3 more minutes left. If nothing presents itself, I'm not gonna take anything. What's up, brother? What's up, man? Can't live with you. Alright, so let's see, we just closed there on the 30-minute. And moment of truth, do we have any displacement on the 2-minute? No displacement. 4-minute, no displacement. 5-minute, no displacement. And final time frame, 1 minute. Dun, da, 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 no displacement. So what does that mean? No trades will be taken. And I'm gonna call it a day today, daily for the live stream just for today. I'll catch you guys later tomorrow, same time, 8:20 o'clock. I'll see you guys later, and I hope you guys have the